Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for August 13th, 2021. I apologize for not posting last week. I was out at the GV Sets conference sponsoring the military suppliers, had to pass out cigars to all the participants. So that was tough, but it was a very great experience meeting with so many retired military and who are now working in the private sector. But alas, we're back today and got a lot of good information for you. So let's talk about stocks. Equities rose for the S&P up 0.75%, while the Russell 2000 was down just over 1%, and the NASDAQ eased by 0.07. Now, overseas, the international developed markets, which is the EFA index, gained 1.56, and their emerging markets declined 0.84. So large caps value stocks were the best performing style in the U.S. We talked about this, their value. We talked about how value is winning this year against growth. Last year, growth won. This year, value is kind of leading the charge. And then by sector, materials and consumer staples were the best performers, while energy and real estate were the laggards. Talk about fixed income. The yield on the 10-year Treasury bond declined following a sharp drop in consumer sentiment. I think we understand that. Commodities last Monday, gold, a precious metal and ETF endowment holding, traded at its lowest since end of March before adding 3% at the end of the week. And it finished off the week at about $1,785 per troy ounce, which is up 0.8% for the full week. And we've been seeing that because a lot of times some of our sectors was like, why is the ETF down right now? You know, everything's going so good. Well, because in our more conservative portfolios, the A and the B, we have a little bit more gold in there. In the C, we have some alternatives. So gold kind of took a hit, and that's what happens. Oil prices rode a roller coaster last week, dropping toward the end of the week as the International Energy Agency lowered its demand outlook. Now, the IEA cut its demand forecast by 100,000 barrels per day and noted this coincides with the planned supply hikes from OPEC and President Biden's urging them to increase supplies further, which we're not going to get into the pipeline issue, but we would have had much more oil. We wouldn't have to worry about OPEC otherwise. But by weekend, the price of West Texas crude oil was only down 0.23%. Economic data, the consumer price inflation index was 5.4% on a year-over-year basis, ahead of expectations and remaining at a 13-year high due to continued supply constraints. Now, the most notable category was used cars, where inflation nearly came to a screeching halt in July after rising 10.5% in June. After excluding volatile food and energy, the core inflation was 4.3%. We talk about this all the time. What are they saying? Oh, it's transitory. It's transitory. Let me tell you something. When wages go up from $10 to $15 to $18 an hour, they're not coming back down. And what happens? Food goes up. Wages have to go up. You have to raise the price of goods and services because now you're paying your employees more. Hey, that's fine, but it all kind of happens. That's what happens. That's just the way it is. So the transitory, what we're going to probably see is, which will be transitory, will be things like lumber as it's starting to come back down. The housing, what's going to happen is once the stay on foreclosure gets lifted, we're going to see more inventory on the market, which means we're going to have more supply, which means the prices could come down or level out as well. And then once we get the chip shortage taken care of, what happens with the chip shortage? All the supply of the 100,000 vehicles sitting out there that can't come to the showroom because there's no chips, now we'll have that, and there won't be such a demand on the used car market. Those will come down. But for right now, that is inflation that's transitory, so some of it will be, but a lot of it is here to stay, folks, and I'm sure you understand that. So the U.S. wholesale price inflation accelerated to 7.8% in July on a year-over-year basis from 7.3% in June, ahead of expectations as prices for services such as travel led the gain. Now, widespread shortages of labor and materials continue to pressure producer prices upward. Consumer sentiment fell to its lowest point since the height of the pandemic last year to 70.2 in August from 81.2 in July, well below the consensus estimate. Confidence faces a growing headwind from the COVID-19 variants and resume mask mandates. Well, it's one thing after another, people. So I'm really thinking that regardless, people, a lot of us, right, we want to get back to work. Yes, there's concerns out there, but it's like, how long is this going to go on? We need to see that something that's really working. I think we've seen a lot of people who are wondering if any of this stuff is actually working, and the fear and the concerns are out there, but I think we would all like to have some real answers here. So there are now 1.3 million more job openings than unemployed persons in America. There have never been this many job openings, 10 million in the U.S. as there were at the end of June, last report. So what does that mean? Well, those who are saying, I can't find a job, they're just not looking, right? I mean, there are job openings absolutely everywhere. We've posted a couple times for job openings and got 2 people looking for it. Why? Because they're making more sitting at home. So hopefully we're going to see that start to subside, because there are so many good paying jobs out there right now. Let's talk about company news. Now, Mercado Libre, which is a G33 holding, shares rose 5.4% following the report that revenues and earnings far exceeded expectations for this Latin America e-commerce giant, and results were driven by a 47.4% year-over-year increase in this unique active users. Now, Munich Re, which is a G40I holding, reported results that were ahead of expectations. Additionally, pricing trends and demand were stronger than expected for this global reinsurance firm. Now, capital positions were above consensus. Shares rose 7.45% for the week. Let's talk about Cisco, a G50 holding. Shares rose 7.47% for the week. Now, this food service operator announced revenues and earnings that beat expectations, and management noted accelerated growth in the final month of the quarter. Management also expects to gain market share in the new fiscal year, as well as accelerate that in the coming years. That is it for today. Thank you so much for being part of the ARA family. We're very thankful for having you. And of course, if you have any questions, you need to call us, feel free at 855-756-5700, or visit us at aradvisorsinc.com. God bless you. Have a great week. We'll see you at the next video.